Good afternoon, everybody. It's Pablo.zuanic, equity analyst at Zuanic and Associates. We have a panel this afternoon to discuss the outlook for the U.S. cannabis industry, a distinguished panel indeed of four MSO CEOs. We have Eric Offenberger, CEO at Vext Science, Jason Vedadi, CEO at Story Companies. We have Robert Groesbeck, he's a co-CEO at Planet 13 Holdings. And we have Sam Brill, CEO at Ascend Wellness Holdings. Welcome to all of you.
Thank you.
So look, can we just start with brief introductions? I think the audience already knows most of you, but let's just start with brief introductions about your company. Jason, I'll start with you.
Sure. We are a private company, currently operational in 4 states, Maryland, Ohio, Arizona, Georgia, and then we've recently been licensed in Texas. We've been in operation since 2021. And prior management team was part of a public company that sold in 2020. So about 1,000 employees currently and expanding.
That's great. Thank you. Sam, go ahead.
Ascend Wellness Holdings is a publicly traded company. We're a leading vertically integrated cannabis operator and a consumer packaged goods company. We operate in 7 states via 7 cultivation facilities, 46 stores, including partners, about 2,500 employees, and we have leading brands of Ozone, Simply Herb, and High Wired in our key states of Illinois, New Jersey, and Massachusetts.
That's great. Thank you. Bob, go ahead.
Yeah, thanks, Pablo. Planet 13 currently operates in 4 states. We will be exiting California here shortly. We're in Nevada, Florida, and Illinois. Company was founded in actually 2014, went public 2018, and we've experienced this crazy ride for the last 10 years, and kind of excited to see what the future holds in the near term. Currently, about 800 employees across the 4 states.
That's great. Thank you. Eric, go ahead, please.
Yeah, Vext operates in 2 states, Arizona and Ohio. We're the smallest of the group today. We have about 300 employees, and that's the Vext story at this stage.
That's good. Thank you. So look, for the audience, I asked most of the questions, but if you want to ask, you can send me an email or you can put it on the Twitter bubble and ask your questions there, or in Zoom, also in the chat. And we'll do our best to get to those questions. So we want to start with some macro questions, then we'll move on to company-specific questions and then discuss the outlook. So Eric, I'm going to stay with you. In terms of rescheduling, right? And these questions are for all of you, but let's start with Eric. If possible, try to, assuming that it happens, if possible, please quantify the impact from rescheduling on your company in terms of quantifiable benefits. And then, talk about the qualitative benefits to the industry and to your company specifically. Also related to that, assuming the DOJ, and I know we don't know a lot of these things necessarily per se, but assuming the DOJ publishes a final rule, say by January 30th, when does rescheduling become effective for 280E purposes, based on what you understand? And then the last one regarding rescheduling, Eric, any predictions on what happens to the unpaid portion of past 280E tax liabilities called long-term uncertain tax benefits in some cases? Is there a pardon, a full pardon on those liabilities, a haircut, restructuring plans, payment plans? Eric, I'll start with you. Thank you.
There's a lot in that.
Yep.
From my perspective, I think the first thing that really happens is it's just clarity and simplicity. Obviously, cash flow should improve for everybody in the industry because you don't have to deal with that issue. But I think it's more the simplicity. There's a lot of structure and a lot of stuff in the back end on this industry that has to do with tax planning, tax strategy, organizational structures and stuff that become a lot more simplistic and less complicated like other businesses. So I think that helps a tremendous amount. You won't just be waiting on that strategy to come through. As far as timelines and that, I've never seen the IRS go backwards. They're always retro. They go forward. So I expect that this will happen for 2026, that the 280E will go away in 2026 if they reschedule, but it won't go backwards. What I think happens if it goes backwards is a lot of the IRS analysts and stuff along those lines will be trying to settle up the past claims. So they should be a little bit more proactive and trying to get to a conclusion and a possible settlement. And we've heard rumors that, maybe they'll back off on the medical sales. That'll be the first thing that they want to give in on. But we think they'll be a lot more amicable. And for Vext, the nice thing is we're in audit right now up through year 2023. So we should be able to get our UTPs all cleared up and have a good understanding, hopefully sooner rather than later, when it normally takes you a couple of years to get through the tax process and the appeals process and everything. We think that should speed up in this area too, because there'll be more clarity from the IRS's standpoint of what's going to happen in the future. So they'll want to clear up the past. So that's our take on it.
Right. Thank you, Eric. Bob, on the same question.
Yeah, I think Eric hit it right on the head. Look, very grateful that the order issued. Just a lot of uncertainty, of course. And I think the market is a testament to that. We saw a huge run up to the announcement and then a dramatic drop. I think our company alone, we're over 100% up. The market lows uncertainty, and unfortunately, there weren't a lot of details there in the announcement on how this was all going to fall into place. I'm hopeful that the DOJ issues their opinion by the end of the month. All we're looking for is clarity and some clarification on how we move forward. On the past tax issue, obviously that's a very important issue for our company. And I think Eric's right. Typically, it's not retroactive. Changes of perspective only unless, the tax code writes in provisions specifically making it retroactive. But I think there will be movement there. I think there will be, there's plenty of room to negotiate these liabilities and try to find some compromise with the IRS. So, again, overall, I'm very encouraged. It's certainly a step in the right direction. Again, we're waiting for some clarity, and then we'll make moves accordingly.
Thank you. Sam, the same questions for you, but your take. Thank you.
Well, look, I look forward to it happening whenever it happens. Hopefully, end of January is when it occurs. And then we can look forward finally with some certainty. And as a public company, I care very much about the revaluation opportunity. A lot of companies are undervalued relative to other industries, and I'd love to see that change in this industry, especially first end. We have a strong balance sheet, operating free cash flow, industry-wide leadership metrics in retail and CPG. So I look forward to the opportunity to have a cheaper cost of capital and be able to use my equity as currency in that future environment. As for how the rule is enforced and when it happens, it sounds like 2026, assuming it happens this year, is when it will take place. I would point out that there is a precedent of lookbacks with gay marriage. There was an IRS lookback of 3 years for joint filings. So some tax lawyers think that could be applied here. I'm not a tax lawyer, so I'm not going to speak for them. I'm just repeating what I heard. So I'm hopeful that something like that could occur. And then I think it becomes a more productive conversation with the IRS in terms of how to settle whatever's left, depending on how they apply the rule. So, and even before before rescheduling, there is precedent with State House of how they were actually outright opposed and were kind of poking the IRS in the eye, and they still had a pretty favorable settlement that was spread over 10 years.
Thank you. Jason, on the same topic.
I've been, my first year in cannabis was 2009, 2010. So if I went through kind of the lineage of what I thought would happen, when it would happen, I would be cautiously optimistic in anything that I was kind of persuaded to believe will happen in a specific timeline. But I'm genuinely optimistic about the rule getting published sooner than later. And I kind of highly doubt the IRS comes out with some overarching, ruling on how this is going to take place. And I think these will get individually settled out. And I think everybody's situations are different. You've got public companies taking the position they owe 280 and they've been making the payments. You've had people take tax positions that they don't owe it. And so I think some of those gambles may work in some people's benefit, and some people may regret having taken a specific position. I'm just not sure on how that's going to play out, but I don't expect the IRS just come out and give people a ruling that this was like clear cut black letter law looking back. And so I don't think that like investors should hang their hat specifically on one specific thing. I think they should have an open mind about how this gets done. I don't think the government is also going to just take this approach that everything was black letter law, look back, and it's just fine. I do think that everybody's positions are unique, and I think they'll get settled out one way or another. And if we're thinking about when it would occur, I think it would be really optimistic to think that there's some kind of ruling that says we didn't owe 280 in 25. So my gut instinct is that if this gets finalized the next 30 to 60 days, that 26 would be the first year that it's clear that we don't owe 280.
Right. Got it. Thank you very much. Appreciate all the color there. I'm going to move the discussion now to the capital markets impact. I'll start with you, Sam, and I'm going to read out the questions here. And I know there's a lot here. Other than the share price swings, how would you characterize the investor response to the rescheduling news flow? For example, more inbounds from potential investors, more private capital available, debt capital, more banks, private debt. Even in terms of M&A, using stock, are people, are sellers more willing to take stock now given the news flow? And if you can, also remind us of the actual direct practical impact from passage of safer banking in your business. And I know that rescheduling doesn't necessarily mean safer banking right away, of course. But Sam, I'll start with you on those questions.
Yeah, I think safer banking is a little different than rescheduling. I think it takes it that next step further. But rescheduling, look, obviously the unfair 280E tax burden, having clarity for investors that goes away is extremely important. It could lead to normalizing the capital markets for cannabis, allow for better cost of capital. There's a very wide cost of capital spread for our industry. It's somewhere between 500 and 600 basis points. So I'm not saying you would get all of that, but certainly it would be different, I would imagine. And then you can get more traditional financing. I think there's a path to uplisting, but that will take a lot longer. Banking probably helps that accelerate, although the respective agencies can start that process in terms of how they view companies going forward. So there's that. And then even the next step to that would be credit cards. I think that's the biggest impact on actual sales in California. When customers were able to use credit cards for certain periods, those companies saw a 25% uplift in average ticket. So I think that could be material, given that we're a cash business. You can see it in our in our revenue on the retail basis. Friday is the biggest day because that's payday. People being able to smooth that out, have more visibility, manage their finances accordingly, shows that they have a more elasticity with their wallet when they shop. So again, none of it, I would say specifically uplisting and credit cards are not a give me, and I'm not even sure with SAFE that gets there. There are specific regulatory agencies that review that, and hopefully they can start that process, and we can get movement there.
Thank you. Jason, on the same topic, I realize you're a private company, but your views on the impact on the financial side. Yeah.
I think just getting rid of the tax burden allows companies to rebalance their balance sheet. And so I kind of expect M&A to pick up one way or another, and people have other creative ways of getting it done. I haven't seen in this very short period of time window, I haven't seen any new credit enter the market, no new lenders. I haven't experienced that. But over the last, I'd say, year, since we generally deal with a kind of robust family office network and large private investors in our cap table, that I think it's been a wait and see game. So I think if the tax structure changes the way I expect, then the return profiles change. And so I expect to see more equity enter the market. I'm not exactly sure if the credit market gets there as fast as the equity market gets there. And then, when you think about exchanges and credit card companies, that's an interesting paradigm on what they're going to need for cover, because they could actually do it today if they wanted to. So the privately held company. So MasterCard and Visa could actually change their policies today on the back of rescheduling and just say that's enough for them. So could the exchanges. I doubt that's the cover they're looking for, but they actually could just make the decision. They could have done it 2 years ago and just said that they want to do it and, risked whatever regulatory risk or criminal prosecution or whatever they wanted to look at. But they could make the decision on the back of rescheduling and kind of go. And I assume that the group, Super PAC and a whole bunch of us that deal with the lobby are trying to figure out what it is that they want out of that, what they want for cover and whether we can get that. I don't think that specific ask is like clear today, but I'm confident the administration wants to help us kind of get there. And so it's just going to kind of continue to take the same effort it did to get the rescheduling done.
Right. Thank you. Bob, on the same question here.
Yeah, I won't restate what the other said. I thought that was very, very compelling. On the credit side of it, I'm a bit more optimistic. I think we're going to see some movement here, hopefully in 26. I believe that at the end of the day, if the large credit card players feel that they have cover and they're not going to risk any issues with the federal regulators, I think they want to be in this space. It's an opportunity to make money, particularly in light of the president's announcement the other day. They wants to cap interest rates at 10% for the next year for these guys. So that'll be interesting to see how that all plays out. But on the equity side, I mean, look, obviously that's critically important for us as a public company, and we're watching that closely. We've had a lot of inbounds. I mean, obviously leading up to the EO and shortly after the president signed that, we've had a tremendous amount of input. But again, with the significant drop shortly thereafter, we've seen a commensurate drop in calls and in contacts. So again, right now there's just a lot of uncertainty, and we need these chips to fall. Particularly, we'll see what the DOJ does, and then I think that'll be the catalyst to get next steps in place. And when that happens, I think we're gonna finally see some positive movement. And again, I look at the cannabis space like I evaluate it in dog years. I mean, things move incredibly slow. We've been to this point a number of times over the past few years that we were going to see meaningful legislation drop, and only to see it delayed or not come at all. But I think as I said earlier in my comments, we've made a significant step forward here, and now it's just time for the feds and the industry to kind of put these pieces into place and allow us to operate as regular businesses moving forward and get deductibility and get fair tax treatment.
Eric, go on. I'm sorry, Bob. Go on.
No, I was just saying I'm optimistic. It's moved a lot slower than I'd anticipated, but we are moving in the right direction finally.
Yeah. Eric, on the same topic, I mean, specifically for you, I mean, you've talked about M&A, Eric. I don't know if, in a month's time, things can change so much, but, are people more receptive to M&A on the potential targets out there? If you can, I'm trying to keep the discussion macro, not company specific so far, but whatever you can add there, Eric, thank you.
Well, I think that, I think everybody has the same sentiment. I think M&A becomes a little bit more attractive and a lot easier to do as it starts to move along in that. I think one of the unwritten things is the simplicity of getting your organizational structures, and you'll be able to take advantage of accelerated depreciations and stuff like that a lot simpler. That's out in the code right now. That came through on that, the bill that was passed in July. So I think some of those things open up to the industry a lot cleaner and a lot easier too. I really think the biggest change is going to be just in the clarity for people and the simplicity of operations. I mean, this industry incurs a lot of expense in legal fees and stuff on the tax laws and on different things. I think that goes away, or at least gets greatly reduced. I'm looking forward to that.
Thank you. I'm going to move the discussion now to what's happening with Hemp-derivatives. I'm going to stay with you, Eric. The CR was signed November 12th. And I know there's a lot of unknowns again, like I guess most of these topics. But Eric, for you, although the CR does not become effective until November 12th, 2026, have you seen any changes so far in the hemp derivatives markets that you face in your footprint? Ohio and Arizona. Any state regulatory changes for hemp derivatives that are taking place that you may want to highlight in your states? And in your opinion, if the CR ban sticks, try to quantify the market impact in your key states. I mean, if you want to. Thank you, Eric. I'll start with you there.
Yeah, it's hard to quantify exactly what the impact's been. In Arizona, we had the Attorney General out in March or April, basically starting to shut it down from that standpoint in Arizona. So you started to see some of that. Ohio obviously has been very active with their legislation of trying to, start to bring that into focus. We saw a lot of impact in Ohio when this was happening with, dispensaries opening up that really weren't dispensaries, but they were opening up as if they were a dispensary. So we saw some of that, but I can't really quantify it of what it's done other than to think subjectively it's a benefit. And I think it's, good for the marketplace and all the reasons that they want to regulate this more. I think that makes a lot of sense, but to tell you exactly the impact or how it's going to impact, it's a guess.
Okay. Jason, thank you, Eric. Jason, on the same question?
Yeah, it's a market by market issue. I think the net impact in, say, Ohio, where there's 3,000 open outlets in a relatively new rec market versus a more established rec market in Arizona, where I think prices have compressed quite a bit more in our Arizona market. And so I think people are less likely to buy the hemp derivatives there. So I think we see a greater impact coming back in Ohio as that. And I think that Ohio is one of the few states that actually has a faster sunset currently passed by the governor sometime around mid-March. The hemp industry would have to be done. But I mean, honestly, it's a pretty big difference just having, an unregulated, untested, normally taxed environment where a lot of the products were really not, just D9, D8 products are like actually selling just real flower and, marketing however they want. So it's a pretty existential threat to the industry that got reversed in a CR. And in some ways, I think it's probably more important than rescheduling was long term.
Wow. Thank you. Bob, same topic for you, same questions for you.
Yeah, I do agree. I think it's market specific, and I can speak to the two big markets we're in, of course, Florida and Nevada. Intoxicating hemp has had a dramatic impact on our business in a very negative way, and the industry, as was alluded to earlier. They're playing in the space, and let's not kid ourselves. These products are intoxicating hemp products, and in Nevada, it had a dramatic impact on us. We saw in the Las Vegas Strip, I think we counted 12 or 13 active stores and basically holding themselves out as dispensaries. And many consumers didn't even know the difference or don't know the difference. And we think in Nevada, we estimated it was costing us about $1 million a month. We're very, very excited to hear that the county commission has taken a very aggressive approach to shut this down with some new ordinance language that will be coming online, I believe, in March. So they recognize the issue. They don't get the tax benefit as regulators. They see what it's doing to the licensed regulated industry, and they've finally taken some progressive actions. So we're excited to see that. Florida's a bigger issue, though, I think, in that they allowed it to explode. And as I've said, Pablo, in prior discussions with you, and I think on some of your podcasts, we've seen a proliferation down there unlike any other state. They're selling these products in dress shops, for goodness sakes, and selling to tourist customers, and we can't touch them. We can only touch licensed patients, and we've just seen a blatant abuse of that, and not a real appetite to rein that in, at least at the state level yet. We're eternal optimists. We're hopeful they'll recognize that. Just from a lost revenue standpoint for the state, it should have been on the radar a long time ago. But it's had a devastating impact to our operations in both of those states. And, we're excited to see that bill drop. And if nothing else, to shine a light on this industry and what they've done and how they've played without regulatory oversight. And again, it was mentioned earlier, the simple fact that they can put these products into the market untested is just shocking to me. And we constantly buy from the hemp industry, and we constantly test their products. So we've got quite a library of data that we could show, and we do show to regulators to get a sense of just, you know, how abusive they've been. And we're pleased to see that there's been a movement now to rein this in.
That's great. Look, just a quick follow-up here, and any one of you can answer here, but touching on a point that Jason made, rec with higher prices versus rec with lower prices, Ohio, Arizona, so a bigger issue in Ohio, right? But and I know all this has to also do with whatever the state regulations are, which vary a lot. But what about rec versus med? I mean, if I think of Florida, a medical market, I guess pricing a bit more competitive, and then Ohio, a rec market with high prices, all else equal, where will be a bigger deal? I'm just trying to distinguish whether the market is med or rec, whether it's a bigger issue. I mean, intuitively, I would think that if it's med, because there's no rec market, hemp-derivatives could be a bigger issue, but maybe I'm missing something out there. Anyone want to comment on that? Maybe Jason?
Well,
Mm-hmm.
I mean, I'll go.
Jason, go ahead.
I mean, I would say, you know, Maryland and Ohio definitely stand out to me, where like all the gas stations sell hemp-derived products. They can actually advertise. I have a store that's actually bookend by 2 gas stations, both of which advertise cannabis sold here. One says weed, one says cannabis. It took me about a year to get an Ascend sign approved by my store. These guys can just put it up right under the price of gas to advertise. And when you go into those gas stations, it was pretty shocking, because I've been to a few places in New Jersey, and they'll have like 50 to 100 products on the shelf. These gas stations had 500 SKUs plus. It was a full-on dispensary. They had some potato chips and like drinks, but it was a full-on dispensary by the checkout. So it was eye-opening for me to see that. And I found Maryland and Ohio to stand out in my markets more than anything, but it's across all of my markets. There is a hemp derived THC piece going on everywhere. And I'm glad that the regulators are finally taking steps to fight that. This is a public health issue. I have a kid in college, and when I go to his dorm, I see all the stuff that he bought at the gas station. He's underage. He used my credit card to buy it, and they never carded him. And it's got THCP in it on top of that. So you're talking about something that's synthetic, that's much stronger than regular THC. And by the way, that's the type of thing that ends up putting people in the hospital. So when people complain about cannabis putting more people in the hospital, how many doctors are asking whether that's hemp derived or if that's regulated? Nobody. But when you canvass doctors and you ask, or you go to patients who've been hospitalized and you ask that question, almost every single time, it's hemp-derived product. It wasn't regulated market stuff. So that's an important thing, that we finally are focused on the health aspect of this. And I'm glad to see that that we're taking some action here. The estimated size of the U.S. hemp-derived product industry is somewhere. The lowest estimate I heard was $6 billion, and the highest one I heard was 30. And it's probably somewhere in between. But that's a huge amount of TAM relative to the size of the regulated market, and that's a tremendous opportunity for us. And again, I agree with you. It will vary by market. I think in medical markets, it's because you don't have, if you're not on a border with a regulated AU market, then that might be your only option if you can't get a card. But it's certainly affecting us everywhere, and states are taking action too. Ohio already took action today. New Jersey took action, and they're requiring businesses to sell all of their hemp-derived products by April 13th. And then on beverage, November 13th, they have to be completely sold out. So, it's another example of the state actually taking action, because if the states don't take action, even with a federal ban, it will depend on the state, because they would actually have to deal with what we have to do and have an in-state supply chain to actually build up product in the states where they allow it. But I think that'll make it more challenging, and they'll get to feel what we feel now as a regulated industry.
That's great. That's great color, Sam. Thank you. Look, for the audience, we want to move the discussion on to company-specific questions. Sam, I'm going to stay with you. Let's start with Ascend Holdings. I'm going to read out the questions. Can you rank if you want to, can you rank your states by sales? Are Illinois and New Jersey your 2 largest contributors to sales? Second question, can you talk about the states where you have social equity partnerships outside of your Ascend branded retail? I'm just going to read them out. And then Illinois, how are you adapting to a proliferation of the new 185 social equity stores on the retail and wholesale side? New Jersey, the state continues to license more stores, but most towns still do not allow dispensaries, which makes for high store density in the towns that do. How has that impacted your dispensary business? And then, sorry, I know there's a lot here, Sam. Michigan and Massachusetts are two of the most price competitive markets, but seems you are navigating both markets well. Can you share any lessons learned? And then your best prediction for when and if we get rec in PA. Again, Sam, sorry, there's a lot there. Thank you. Let's start with you.
That is a lot. I'll try to cover all of those. We don't publicly disclose which states by revenue, but I would say our top 3 states are Illinois, Ohio, and New Jersey. So that's on the retail side. And then when I look at the dispensary, the partnerships, that's a key strategy for us. We believe we have something that's called densification. We want to get bigger in the states that we're in, where we have a huge fixed cost asset for cultivation, and then that becomes the hub, and then the stores are the spokes, and we want to add as many spokes as we can through partnerships in the states where they're allowed. And we've already, when I started, we had 39 stores. We're up to 36, including partners now, and we plan to be at 60 by year end. So this is a core strategy for us to really leverage those cultivation assets and drive operating leverage for our business and more efficiencies and the margin profile. And it also helps us sell more of our brands in our stores, which increases the fixed asset utilization, and it gives us greater control across the value chain and supports that customer-centric mindset that we have from our CPG strategy. And I think it's really important for us to be able to build those brands in those states. And then you asked about, I'm sorry, I lost track of all your...
Illinois, how are you adapting to this 185 new social equity stores that have come to or are coming to market, right? How are you adapting on the retail and wholesale side? New Jersey, the state continues to add more licenses.
Yeah.
Mm-hmm.
No, I mean, look, the social equity, more social equity partnership, we're part of that. Right? Most of all the stores that we're adding in Illinois, for example, are social equity partnerships. And I think that's a great opportunity for us to increase that densification strategy. And it also helps us with our wholesale business as more stores open. While they're lowering the average revenue per store, it's increasing the pie in total. So that's good for wholesale, especially as we drive our brands. And then in New Jersey, we're one of the 6 original licenses. So the legislature recently passed a bill that allows us to have up to 7 social equity partnerships in that state. And we recently launched our first with a social equity partner under the brand Mr. Jones, which has done extremely well. That opened in December, and we have 5 more in development.
That's great. Look, if I can, just the last one for you, Sam, if you want to talk about, Michigan, Massachusetts, very price competitive. But it seems that you're doing well there or navigating those markets well.
I think it's about the customer experience and having the right menus and the right products. And so on the CPG side, you want to make sure that you're hitting all those key segments. And we've been able to develop some very exciting products that have done well in all of our markets. And I think that's helped us retain customers, increase our average revenue per gram, which is how we look at it. We want maximum revenue. We're looking at revenue per gram as a key metric within our business. And that's only going to be achieved if you have new and exciting products and you're constantly coming out with things that the customer wants. I think that's helped us differentiate ourselves in those markets, especially Massachusetts. The launch of, for example, High Wired was a huge success there. It was a market that had other players, but they were, I would say, lower quality products. And this really hit a market segment that people wanted. I could talk about Effen, which is effects-based gummies that were also highly successful in that market. And then we we took that brand, took another step, and put that into vapes. There aren't a lot of vapes that are specifically for that. We've always focused on the enthusiasts. I mean, those are our very important customers, but we've ignored some of the novices. And so when you have a line that does really well with effects based, where you're telling the customer what it does, having vapes that are specific for that has really been successful. And I think doing things like that have helped us win in that market. I mean, we had a very big launch for Christmas. We did King of Queen colas, which were these 14-gram colas that were curated. We actually had a competition from all of our grows, with all the master growers, to come up and try to create the best cola you could for the customers. And it became so competitive that we thought we were going to have thousands of these for Christmas, and we would have an exclusive product. And it turned out, because they were so precise on how they wanted these things to be, we ended up with like less than 100 for all of our markets. So we ended up just giving them to our top tier loyalty customers for free as a gift. And that was extremely well received, and has actually had a lot of inquiries about when they can get the next one, and they want to buy them this time. And it's those are the types of things within loyalty where you create a good experience that's repeatable, where customers want to come back.
Thank you. That's great, Connor. I appreciate that. Look, in terms of the order, I'm gonna go next to Story, then I'm gonna go to Vext Science, and then Planet 13. Jason, I realize it's a private company, but I'll read out the questions. Can you rank your states by sales, your read of the Florida market and your performance there? How would you compare the performance of your Maryland and Ohio operations? The timeline in Texas, when can you start operations, expansion plans? Are you raising capital? How can potential investors contact you? I know it's a private company. Again, in terms of what you can share, Jason. Thank you.
So I'm not in Florida. We're in Arizona. So I'll just take that as an Arizona question.
Yeah.
So my performance in Florida is very poor right now, actually. Our three markets.
Sorry about, but I mean, typo there. But
no, you're all right.
Is that a market that you would think of entering via M&A?
No. When our prior company at Harvest, we had built a 100,000-foot indoor cultivation facility, and we had, I think, close to 30 stores when it got acquired. For us, our approach in general, just to kind of give out, we did really well along the way on the license application process, and without having to buy things in general. Mm-hmm. So our equity stack was easier to kind of deal with, and that's how we entered the Texas market, was through license application. And so I don't think Florida is somewhere we'd want to go in now. I think that would be a really big lift. I think it would be the most CapEx intensive, to go in and compete in that market. I mean, I know it's medical, but I would think the people that are established there have such a huge head start that it's something we wouldn't engage unless it was somebody who wanted to bolt in and do something with us, which would have to be very unique. As far as their states are concerned, Arizona's a little different. I've been operating there since 2011. It's a market where there's not wholesale and retail equilibrium. It's an extremely strong retail state, and wholesale is very difficult. I would say that the wholesaler has very limited control of the market, and retail is in complete control, whereas Maryland and Ohio have a little better equilibrium, where I think wholesalers and retailers can both be profitable. We've been in Maryland since 2020. It's a very steady market. We're really happy with it. I feel like the trade association there works well together. And I see Ohio looking a lot like Maryland long term, similar demographics on license to population density. So all in all, the three markets we're currently operating in, and Georgia is very early and preliminary. Your question about Texas, we are assessing the new rules right now. We have property identified for cultivation. We have a store that we will open in the greater Houston area, because that's the geographical location we're awarded in. That'll be the first place we open. And we'll be working on advancement of the T-Cup program in active legislation. Texas, the legislature only meets every other year, so that's next year. It'll meet again. It's currently, I would say, in early infant stages medical program, no flower. and more restrictive. They did just add chronic pain as an ailment, so I suspect that market will improve. It has also got a very robust hemp market, probably the most robust hemp market in the United States. They factored it somewhere around 4 billion, and so we'll see how the state works with enforcement and their current hemp program on a go-forward basis. As far as raising capital, we're not currently raising any capital, and so that's we're not looking at any specific M&A right now. We may be active. We'll be active in trying to expand our Arizona portfolio, but I'm not sure that we'll have to raise any capital to do that. So no real need there.
Yeah. And when you say expand Arizona portfolio, obviously on the stores, right?
Yeah, we currently operate 11 stores there, and we would like to get to 20. So we haven't been active in the last 6 or 8 months, but we've recently started to look at opportunities, and we're underwriting a few as we speak, and we'd look at a larger transaction if one of the larger players there wanted to integrate or sell to us. So we'd like to double our expansion there over the next 12 months.
Before I move on, is there a cap on Arizona stores, in your opinion?
There's no cap. There's no rule against cap.
Yep.
So it's one of the very few states that, technically speaking, one operator could own every store in the state from a technical standpoint, from a regulatory standpoint. So I suspect that if the public companies, if they're able to use their equity or get to a place to where they'd raise capital and got valuations, away from where they're currently at, they're fairly depressed, or got to like what I would say normalized CPG retail look like, which trades between 13 and 17 times. I would expect Arizona to be one of the fastest states to consolidate, because if you look at most of these public companies, they're capped in their respective markets. In Maryland, you can only own 4, technically 8 in Ohio. And there's obviously some ways to navigate around, being able to leverage those situations. But Arizona in particular, I think that you'll see a mass consolidation very quickly if the MSOs had the ability to utilize a future valuation arbitrage in that market. It's a very good market for retail. There's a license cap in the existing market, so I assume in the future it'll get consolidated.
Right. Thank you. Eric, Vext Science, I'll read out the questions. Your read of the Ohio market becoming more price competitive and potential regulatory changes. Is there going to be a reversal of some of the so-called non-medical rules? They still don't call them AU rules. Performance of your consolidated Ohio store so far and future expansion plans in terms of what you want to share. How are you adapting to a challenging Arizona market? Cash flow and balance sheet trends, if you can touch on that, and plans to enter other states. Thank you, Eric.
All right. I think, Jason, you did a hell of a job on Arizona. I can't disagree with you on one of your statements. So I think you hit Arizona on the head. Ohio, we think Ohio is a great state. We like it. We like where we're positioned in Ohio. We like the asset structure. And again, we like Arizona because we've never been a wholesaler per se. We've always matched up so that we didn't have to necessarily compete in that market. I agree with Jason's comment on Arizona that its problem is it's got just way too much capacity, and until there's more consolidation and more control on the retail front, those licenses won't get handled correctly and that market get more balanced. Ohio, I think, has a lot of upside. I think you're right with the smoke shops and the gas stations, and Sam hit on that. We've all seen that. I think as that starts to come out of the market, that's going to continue to help that Ohio market, and it'll take care of the stores that are coming online. So I do think Ohio will continue to grow. From Vext's standpoint, again, we built the balance sheet. We didn't take on a bunch of debt that's hard to handle. It's easy to control. It's mortgage based usually for the most part. So our debt's pretty good. We don't look at an equity raise or anything like that at this point in time, but we do look at where's there going to be opportunities. We think there's going to be some more shakeup in the industry. You've seen PharmaCann, the AYR, you're seeing some of those assets. And I think with rescheduling, you might see some more of those things actually start to come into the market. And if you have the balance sheet correct, you'll be able to do it. that's where we think Vext will be in a good position is, yeah, we won't be hitting the investors on the top tier, but I think there's investors that'll be looking at solid operations, solid balance sheets that might make sense for them. And, that's where we'll see where it goes out.
Eric, can you remind investors how many stores in Ohio you have consolidated already?
We have
and the
5.
timeline of
Yeah.
expansion plans? Thank you.
Yeah, we have 5 open. We have 3 slated. I think we'll have our 6th open in the first quarter, probably 7 and 8 in sometime in 26. So we'll hit the max, and we feel good about it. We're all within a 2-hour radius of the grow and the cultivation. So we've got a tier 1 there, and we have plenty of room to expand in that building. So we expand as we need to. We do it kind of in a step manner. So,
And most of them we drive through, right?
yeah, most of them have drive-through capability. We'll only have one store that there's just no physical way to put a drive-through on it. But we find that is extremely beneficial in that Ohio market.
Right. Thank you. Planet 13, I mean, last but not least, of course, Bob, I'll read out the questions. When can we expect visible improvements in your Florida operations? I have to say that, the OMU data is showing improvements, so congratulations on that. But how are you adapting to a challenging macro environment in Las Vegas, decision to exit California and lessons learned, and then any plans to enter other states? Bob, thank you.
Yeah, I think 26 is going to be kind of focused. We'll continue to be focused on just shoring up our balance sheet and really, getting the company positioned to, better balance supply and demand. So we're integrated in both markets, our big markets. Nevada has been incredibly challenging for, through 25. What's unique about Planet 13 is, our flagship operation here, the Superstore it's a tourist-centric operation. It's experiential. We live or die by tourist count primarily. So historically, we've seen roughly, upwards of 80% of our customers being non-Nevadans. So as the tourist market contracted significantly in 25, we saw a downturn in traffic. So we've pivoted as aggressively as we can now to really kind of, jump back into the locals market with Planet 13, increasing opportunities through our delivery platform and our curbside delivery offering, better pricing for locals. So it is starting to pay dividends. It's been a slow process. We've revamped our marketing programs entirely to really balance both now. We've put a renewed focus on our Medicine branded store, which is an entirely locals play. So, we're playing the cards we're dealt, and we've seen some really significant uptick. Shifting to Florida, our second largest operation from a revenue standpoint. We've gotten nimble there. We've put a significant amount of CapEx into expanding product categories. Our BHO facility is complete, going through state inspections now. So we're optimistic that we'll get an final approval sometime this month, and then move into production very quickly. We think that's a product category that we've been, that we've missed out entirely since we closed the acquisition in May of 24. So we see some significant uptick there for us on a top line revenue standpoint and a SKU count mix. The other thing that we've done in Florida, I think that is going to pay dividends, is we're working, aggressively to add additional strains to the grow houses, and we're seeing some promising numbers come out there. So we're excited about what that brings in the future. Again, additional variety, higher potency, just overall better quality. And then lastly, we're working hard down there just to create the customer experience at a smaller scale, similar to what we do in Nevada, just the Planet 13 name, brand, and again, getting positioned ultimately, at some point for the transition to adult use. So, there are some good things happening. We've introduced our brands now into the Florida market. They've all been well received, and they're now, all growing considerably. There's always room to grow, Pablo, as you know, and we're going to keep pushing the envelope to get there. We've identified our deficiencies, and we brought in a team that I think is capable of really executing and getting us where we need to be. So excited about that. And then lastly, Illinois is, is our third market. We're just a retail operator there, one store in the Waukegan area. It's done well. It continues to do well, but we don't really have any plans in the near term to expand that footprint there. And then lastly, as I'd mentioned at the outset, and you alluded to, we're exiting California. We're hopeful to see that completed by the end of this month, early February. California was a difficult decision. It's an incredibly challenging market to operate in, at least from our standpoint. And we weren't there at scale. We opened a superstore in Orange County. At the time we did that, there was very limited competition versus what we see today. And, the regulatory environment is just challenging, and the taxes are onerous. And the black market in California is huge, and there's no appetite at the government level to rein that in. And all of those obstacles forced us to make some hard decisions. So we made the decision to separate from the state in its entirety, and we think it was a good move, and we think it's going to certainly help the balance sheet moving forward.
Thank you, Bob. Look, Jason, I know you may have to jump off, but if you have to, go ahead. But the last set of questions, we'll move on to, I'll read out some questions from the audience, but in terms of my side, a macro question. And I know it's a crystal ball question. I'll start with you, Sam. Your best prediction about the cannabis regulatory environment by end of 2026, right? Does FDA oversight increase with rescheduling? Or rescheduling does not really make medical cannabis federally legal, so nothing changes in that sense. Your best prediction on that. And other than rescheduling in 2026, and I know again these are crystal ball questions. Do we get safer? Do we get uplisting? Does rescheduling speed up state level reform, including PA going rec? Do we even get descheduling in 2026? Sam, I'll start with you, but the only other question I would add there, and I know we're running out of time. Your message to investors that, for example, people that got excited in December got into a space and then saw the stock go down 26% or the MSO CTF go down 26% the day that the president announced rescheduling news, right? So let's start with you, Sam. Thank you.
Yeah, so I'm not aware of anything in the CSA that the move from Schedule 1 to Schedule 3 would require FDA oversight. Obviously, if operators start making health-related claims like we saw with CBD, I would expect the FDA to crack down on things like that. But I'm not aware of anything that would cause FDA oversight. I think once we get over the hump of actual rescheduling, I think that does open up the door for those agencies to look at uplisting, credit cards. There's all these things that can happen, not guaranteed to happen, but I think it opens the door and we start moving down that road. I think some states might start looking at adult use options a little differently post rescheduling as well. So I think there's a state, call it 2.0 type opportunity there. But I mean, honestly, like Jason said, hemp is probably the biggest competitor that we have, and actually having some real change there with a competitor that could be $20 to $30 billion dollars in terms of total TAM is a huge opportunity. So frankly, going into 2026, I'm very excited. We had the most historic move by the federal government that was positive for the cannabis industry ever, and I think we're set up for, once that major roadblock falls, for all these other positive things to happen. And then by the end of the year, we should hopefully exit with hemp being banned, at least at some level. I don't know if they're going to make carve-outs or anything like that, so I'm not going to make a full prediction, but at least you're seeing it at the state level. They're fully banning it, especially in some of my key states. So I'm actually very excited for what that opportunity set looks like, where the cannabis industry for change maybe has some tailwinds versus constant headwinds for a change.
Oh, that's great. Thank you. Eric, on the same line of questions. Thank you. I think you're on mute, Eric. I think you're on mute.
I was on mute. Sorry, I said I agree with what Sam said. I think really the biggest thing is it's just clarity. I think we're starting to get a little bit of clarity into the industry, and I look at it to be a lot less complex. Complexity is nice when there's a tight supply and tight everything. That's changed in cannabis where those realities aren't really there as much anymore. So we think that that's going to be beneficial. The FDA, I think, is an interesting one of what's going to happen with that. I think that there's some good positives that can occur with that. I think it's going to be really a tough thing for them to get their hands around and how it all comes into play because it's a grown plant. It's not like something that is produced in a lab that has a consistency and hits their efficacies and stuff like that. And it's individualized and stuff along those lines, which makes the beauty of the product, for people's use. And, we got to individual markets and you have individual consumers. So there's a lot of subjectivity with it. And I think that that's, going to benefit us as we go forward. So.
No, that's great. Thank you, Eric. Bob, same questions for you. Pretty much, December 2026, and looking back, what might have happened on the reform front?
Yeah, look, I can't really say much to add on to what Sam and Eric said. They were both spot on, in my opinion. I'm optimistic for 26. As I said, the executive order was a true game changer, although it didn't stick with the markets initially. I think as we see this thing play out over 26, I think it's going to be a game changer. It's probably the most significant change we've had in the history of the industry to date. And again, the markets crave certainty. They just, investors want to know that if they put their money somewhere, that there's a reasonable expectation of return. And it's been incredibly challenging for the publics for a long time because we just don't have that certainty. The executive order, the continuing resolution, these are fantastic steps in the right direction. I'm not sure, I would like to see intoxicating hemp go away. Realistically, I'm not sure. I think there will be some carve outs to allow them to participate moving forward. My comment has always been and will continue to be, if they are going to play in the space, they just need to play by the same rules we do. Because if they do, it's going to be difficult for them to compete against us. And there is a public health component to this that was addressed earlier that I think is very significant. And it needs to be addressed going forward. Now, as far as the FDA coming into play, to take an active role in the space, I'm not a proponent of the government ever being involved in anything at the federal level. I'm hopeful that, Trump's philosophy is that, these should be states' rights issues, sticks, and that is the prevailing process as it goes through regulatory review. But again, I just don't know. But I prefer that these programs continue to be managed at the state level, much like alcohol is regulated, on a state by state basis. So again, overall, very optimistic for the future. From an investor standpoint, I think it creates a lot of opportunity going forward. Is there risk? Of course, but the upside, I think, is significant.
That's great. Thank you. Look, I know we're out of time. We did get through the questions that came by email. Just closing remarks from our speakers. I'll start with you, Eric, then Bob, then Sam. I guess the question, you can pitch your stock, any closing remarks you want to make. But, what's the message to investors out there, especially people that are getting into cannabis only recently and they've seen the volatility, right? What would you tell them to focus on from a macro level? How should they go about, choosing individual companies? I know everybody's supposed to know how to do their own homework, but whatever you want to share in this sense, Eric, closing remarks. I start with you.
Yeah, I think as you look at industries, they usually cycle, right? So I think cannabis had its big cycle about 6 or 7 years ago, and it was pretty easy to operate within it. And, it was everybody expand as fast as you can. Now it's more into an operations. I think you look at a balance sheet, and I agree with everybody's sentiment that 2026 starts to look pretty positive. So I think we're getting ready for a new wave and a new cycle. And I think those investors coming in, if they look at balance sheets and people that are going to be able to use capital for growth, not for cleanup, I think that's where, they should focus. And I think that just like any other investor, you want to be investing for the future, not investing for the past, right? So you never want to get in it after the fact. So I think this is a good cycle for cannabis for those investors right now.
Right. Someone, Eric, I don't want to put you on the spot here. Someone is asking me, whether a reverse split for companies that trade below $1 would make sense, and would that make sense for Vext Science? And is that even a possibility given, the low liquidity in the sector? How do you think about that? And
I don't
answer
think
if
it's,
you want to,
I don't think it makes sense right now, but I definitely think you have to look at that and you have to decide what you're going to do. But I think you have to have like an event or something that's going to happen to carry that. And then you got to be damn careful, because a lot of times when you've seen these historically happen, the shares move back down to that neutral price. So you do all this exercise and work and you really don't get anywhere. So from our standpoint, when we think about those types of things, we think about what's the value going to be to the shareholder in the long term. And that's really how we run the business, is looking at, we have 3 stakeholders and we treat them all equally and try to make sure we do it the right way.
Right. Yeah. Thank you. Closing remarks, Bob?
No, I agree with Eric. I think it's a unique time to be in cannabis again. As we said, we've gone through the first wave. We're now gearing up for the second, I believe, as well. It's a crazy industry. It's starting to mature, and with these recent catalysts at the federal level, I think we'll start operating like a real business. And businesses that survive and do well are looking to the future. They are going to grow. I think we're going to see, as an industry, tremendous consolidation in the next year or two. So the map's going to change considerably, but I'm excited to be a part of it and just see where it goes. And we're excited to bring value to our Planet 13 shareholders in the future.
Bob, someone is asking, and I think you might have touched on it before, but when does the new BHO facility actually start selling? When do you start selling?
Yeah, that's a fantastic question. We've gone through our initial inspections with the OMMU. They always come back with RAIs, looking for additional answers. Again, knock on wood, I'm hopeful we can get through the end of the month here. The team is in place. They're ready to start producing. It's just we're at the whim of the regulatory environment right now. So we're ready to go. I'd like that product on the shelves tomorrow, but unfortunately I can't do it till they give us the thumbs up.
Great, thank you. Sam, go ahead, closing remarks.
Look, on the macro, I think I hit all the key points. This is a pivotal year for this industry. I'm very excited for what that could bring. If I'm talking about Ascend specifically, I would have to say I'm really looking forward to the revaluation opportunity. Ascend trades at one of the lowest valuations in the sector, especially compared to its peers, which doesn't make a lot of sense to me. We have a strong balance sheet, operating cash flows, wide industry leadership, in every metric you can consider. We have a lot of opportunities to reinvest our cash inside our core markets and incredible ROIs. And I don't see why that equals one of the lowest multiples in the industry. And look, we bought back 15 million shares as of last quarter at roughly half of what our stock price is trading at today. So it shows that we're committed to that, and we think that we're undervalued with all the things that we've accomplished to today.
And Sam, in terms of M&A, when you look at your footprint, any gap that you would like to fill realistically, that you would, and any state that you would like to enter, if things lined up for you?
Well, we're always looking at states that make sense, but I'm looking at ROI. I'm looking at, where I'm actually, like, cash is precious and cost of capital is high. So when that changes, maybe, we'll look at it differently, but I have to look at how to allocate capital for my investors. And we're looking at states where I'm going to have the highest batting average. I'm going to have the highest batting average in my core markets. And that's where we're focused. That's what the densification strategy is focused on. And there are a lot of assets for sale in those markets. So I'm excited about adding more spokes to that hub.
Yeah, that's great. Thank you. Thank you very much to our speakers, to the audience. Thank you for joining via X, Restream, and Zoom. Everyone have a good day. And of course, I know it's late and I know Larry David would disagree with me, but Happy New Year anyway. All right. Thank you.
Thank you.
Thank you.